Hey guys, what is going on? Welcome back to the portfolio. Welcome back to the YouTube series. I hope you guys are enjoying the content on the channel. It's great to be back on YouTube. For today's video, I want to do a quick update on the portfolio and then quickly discuss a strategy that I mentioned in my last video, selling off covered calls to supplement dividend income in blue chip stocks. And as an example of that, I'm going to use Pfizer. This is one of the pharmaceutical companies in the Robinhood portfolio that I've had since 2016 when I first opened up this portfolio. But essentially, it's a blue chip stock, a stalwart of the pharmaceutical industry, durable competitive advantage, very strong financials. It's a blue chip stock that has a great dividend, but also you can sell off covered calls to not only double that dividend, but maybe even triple that dividend in a very safe strategy that you can hold this stock longer term and collect passive income through dividends and covered calls. But before I do that, let's take a quick look at the portfolio. As you can see here, up just slightly, 0.46% in the green, 21.52. And if we take a look at the longer term perspective, 1 week up 5.21%. 1 month, it is down 0.51%. 3 months down 15.68%, 87,922 in the red. It has been rebounding here, the portfolio, over the past 1 year, or excuse me, up to date so far this year. 17.76% year to date, 71,278 in the green. But that is in the context of a very large pullback here, 271,767. And a lot of that a mistake in trying to get fancy with tax loss harvesting at the end of the year with Tesla. But let's move down to Pfizer. You can see I did sell off a contract today, a Pfizer PFE, $42 call, 3/17 expiration date. Just sold off one contract. If we go down, you can see -1 for contracts. Again, meaning I sold the contract off to receive on the bottom, as you can see there, $9 for doing that contract, $42 call sell, 3/17, one contract at 9 cents per share. Each contract is 100 shares, so 100 times 9 cents equals $9 income from doing that strategy. And this is something I can repeat every week moving forward. If we take a look at Pfizer, you can see here over the past 1 year of trading, kind of an up and down pattern here. Again, I said blue chip company, so typically the prices are a little bit more stable. There's been quite a bit of fluctuation in the price of Pfizer here, but this is still a very good stock to utilize this strategy of selling off covered calls. You can see here, I just have 130 shares, so I'm only doing one contract at a time, but this is just an example. You can imagine if you have 1,000 shares doing 10 contracts at a time. A very repeatable and dependable strategy here. Dividend yield 3.991%. So this has a very good baseline dividend yield. And then again, selling off covered calls to essentially equaling that dividend, doubling, or maybe even tripling that. I do like this feature on Robinhood. If you go down to research report, if you guys have Robinhood Gold, you can click on full report, get an overview of the company. I like to do this on all the stocks that I'm doing this strategy with. You know, I rely on other resources as well, but this is a very easy way if you have some free time to jump into this. And I do like the full report. If you go to the top right, you can download the full report. And this has quite a bit of information regarding the company. If we scroll down, I do like to go over the financials and valuations. Please take a look at that from time to time. And this report here from Morningstar has a very nice and detailed report here. Financials, revenue, EBITDA, diluted earnings per share, valuation, importantly, price to earnings, dividend yield. Also goes through and analyzes the dividend as well. So this is a very good resource if you have a little bit of time to take a look at that. But going back to Robinhood here, going back to Pfizer, I do want to go over some of the past performance I've been doing with the covered calls. You can see that one up on top. Again, the one I did today, $42 call sell, 3/17, $9. Dividend yield here, PFE dividend, 41 cents per share times 130 shares, 53.30. If we scroll down here, you can see, again, call sell $6, call sell $4. I actually forwarded that one. Short call roll, $43. So you can see here that I'm essentially equaling the dividend. The last dividend here was 40 cents, so the dividend has been increasing over time with Pfizer. This has been a very reliable dividend as well. I don't think there's any fear that this is going to be discontinued, that they're going to suspend the dividend with Pfizer. So again, this is a strategy I've been using, collecting dividend income on a blue chip stock, then also selling off covered calls in a very safe strategy. I don't think these shares will be called away. at any time in the future. And if I do get close to having those called away, I'll simply roll the stock that I did yesterday. You simply jump into options. For example, here, go trade, roll position, and you can roll that out forward to make sure that if it is approaching the strike price of your contract, that you can sell it off a little bit further down the line so that stock isn't called away and you don't have to sell that off from your portfolio. So again, just wanted to quickly go through the portfolio here, detail what I've been doing with some of the stocks in my portfolio, the strategy that I'm going to be employing moving forward, holding blue chip stocks, collecting dividends, and then also selling off covered calls to make supplemental income on those stocks while I hold those in the portfolio for the longer term. So again, just wanted to quickly do a video here updating you guys on the portfolio and that strategy. With that, I'll end this video. Again, if you guys enjoy the content on the video series, feel free to like, share, and subscribe. If you guys have a great video idea, let me know in the comment threads down below, and I'll do my best to get a video for you guys. Until next video, we'll see you then.